Good morning. Welcome to Stock Market Today. It's Tuesday, December 8th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at @DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. I get a lot of the content for this show, give you daily stock ideas to consider. Hit your inbox every trading day before the market opens. So U.S. equities were mostly lower in Monday's trading, but the Nasdaq posted a record close. Energy, fins, and healthcare lagged the broader tape. Comm services and tech were outperformers. Treasuries were mostly bid with some curve flattening. Dollar was stronger against the euro, weaker against the yen, reversing earlier strength. Gold finished up 1.4% off the best levels. WTI crude settled down 1.1%. As we get to the desk this morning, futures are down 60 basis points after Asian markets were mostly weaker overnight, with South Korea notable underperformer while Hong Kong also lagged. European markets are lower as well. Treasuries are unched to slightly weaker following yesterday's strength. Dollar is little changed against the majors. Gold is flat. Crude is down 70 basis points. To kick us off on a Tuesday morning, that starts after a stall day for SPY. If you drill down on the chart, you'd see a doji. Nasdaq made another new high, as did the IWM. SPY support 360, then 340. If we're above 340, we're playing for 4130. I think it's that simple. Risk, reward, framework, map. Above 340, we're playing for 4130. Below 340, we're playing for chop until we get to 320, at which point, if that breaks, the trend is lower and we reevaluate the situation. For the Qs, 260 is key support, 280 is important in the near term. And for IWM, 170, 160, 170, the important zone, the buffer zone, if you will, that you want to see hold if you are bullish the market and if you are bullish small caps, which we are and we are. Turning now to our market in a minute. What are we writing about today? Well, new highs for the Nasdaq as SPY marks a stall day. Tech is at a relative inflection point. Remember, it's Tuesday. We'll do our relative strength work today, and we'll take a look at technology because it's that important. Defensive sectors continue to lag. Remember, I showed you the chart last Tuesday. We looked at that chart with the three relative trends, staples, REITs, Utes, all lagging. I could show you that chart again today, and you'll only see something that's just gotten worse, right? So the defensive sectors are lagging. To me, that's bullish for equities. Biotech is a leader despite the weak trend in healthcare, and futures point to a slightly lower open here today. Major indices from a power bar perspective, the Dow lost 50 bips yesterday, but still pitching that shutout. 3-0 now instead of 4-0 as it has been for the past couple of days. S&P 500, the S&P 500 is down 20 basis points, 118 to 40 bulls to bears there. Take a look at the Nas. The Nas was your outperformer on the day. And we're talking about the fact that, we're seeing some strength now in technology, right? Starting to see some strength in the technology landscape. And that's important because tech had been lagging. So if tech can come on while the other groups hold their ground, well, now all of a sudden you have a real recipe for outperformance. Small caps up on the day, continuing to outperform. And bonds uptick, sending yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Major indexes across the board, however, are mixed. Let's look at our stocks of the day. And I say stocks because we're going to run our screen. And on Tuesdays, we'll run a bullish screen. And if it ever makes sense to run bearish screens, we'll run those. So this one's an interesting one to me because a lot of people ask about finding changes of trend early. You've heard me probably use the phrase personality change, where we're looking for stocks that are gone from laggards to leaders. What I like to do is combine that with money flow also turning, right? So I want to see some accumulation and then that outperformance. So what I did was I started with the Russell 3 as a universe, and I looked for stocks that have a rating of neutral or better in our model. I'm okay with being neutral if we're getting some new leadership. And then from there, I want stocks that have a 1-month high in money flow persistency. So recent signs of accumulation. Within the past month, the accumulation was strong. And then after that, I want relative strength that turned strong this week. So what you'll see is 20 names that passed the test, 20 names that have gone on to pass the screen. Now, for those who are interested in something that might be a little bit more immediately actionable, two of the names are actually oversold here in the near term. That'd be Diamond Hill and People's United Financial. Both of those stocks are oversold. So if you were looking for a name to maybe trade today, I'd probably start with those two. And I mentioned this in my notes. So if you're taking our free 14-day trial, or if you're already a subscriber, you should be doing one of those two things to get stuff like this on a daily basis, and then you can drill down. But either way, I think these are some interesting names that you should be paying attention to. Whole Logic is one that looks kind of compelling in the near term, perhaps. A lot of banks on here. Some oil, right? Here's oil states. Remember, we were highlighting oil services. So some thoughts and some opportunities, and some potentially some opportunities today. Take a look. Turning now to the sector tracker, what's going on with the major sectors? Well, it's nice to see that all but utilities are higher, so that's good. Energy, top of the list, been a monster for the past couple of weeks. We've been highlighting it. You should hopefully be paying attention by now. Financials, your other cyclical group. We've been highlighting it. You should hopefully be paying attention right now. And then you have the comms and tech coming on. That is encouraging. I like this board here. Really do. Healthcare, REITs, and industrials, middle of the road. I'd like to see the materials doing better because it's a group we've liked. Staples, bottom of the list, fine with that. Utilities lagging, fine with that. Remember last week we talked about the defensive groups. I mentioned it today in my note, go through a lot more detail in today's note, but you have your cyclical names leading. You have your offensive big leaders like comm services and tech stabilizing, and you have your defensive groups lagging. That makes a ton of sense to me to be bullish. Speaking of tech, Innovative Tech Services is our industry in focus, and it's been a monster, right? Notwithstanding tech being a little bit of under pressure, especially big cap tech, this ETF has outperformed the S&P by close to 30% over the past 6 months. Has a bullish power bar ratio at 10 to 9. It's ranked 16 of 21 subsectors, and it's moved up 3 slots over the past week. Yelp, JCOM, and SS&C are very bullish ratings. And what I will say from experience, having spent time with the company in a former role, I think SS&C is probably one of the best companies out there that most people have never heard of. Highly suggest reading up on the company. I'm not saying it's immediately actionable today. I have not looked at the chart. But it's a phenomenally run company. And if you understand the story behind the CEO, it's a tremendous story. And I've spent time with them, so I digress. It's a little bit of an experiential thing that I had in a previous life. And I wanted to share it here because I love good businesses. And this is a good business run by a phenomenal CEO. So worth reading up on. But here's the chart on XITK, which is what we care about. And those are new highs yesterday. Up and to the right, solid trend, right? So for all the talk about tech, we're worried about tech. Why? Remember, in my notes for the past week, we've been talking about things like small cap tech and equal weight tech. And here's another example of just tech outperforming. It's not tech. It's mega cap stocks that are seeing some profit taking to rotate into other areas of the market. Tech is fine. Look at Taiwan. Look at South Korea. These things are trading near all-time highs. Tech is fine for now. Fine. Look at the semis. Taking a look at what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. Market access up 5.7%. Exchanges were strong. L Brands, not a lot of news there, up 5.2%. American Airlines, Barclays out with a note on the space, up 5%. Tyler, another great company, Tyler, TYL. Our rating doesn't reflect it right now. But if you were to read up about Tyler, what they do, who they serve, tremendous company, TYL. 3.8% to the good. Pulte PHM, up 3.7%. On the loser side of the board, Lumen, Lumn. Stock's been in the news a bit lately, down 6%. Nothing company specific there. Simon Property, SPG. Saw some news relating to JCPenney. Not sure if that had any kind of impact. Maybe JCPenney's a big, or was, I don't know, a tenant. but down 4.8%. The bottom three, FTI, Devon, and HFC, some profit taking within the energy space. Energy did lag yesterday. Been on fire though, right? So not surprising to see, or can't blame people for taking some off the table, which is it's interesting, but I want to pay attention there. All right, so what's it going to be for tech? Everyone's talking about tech, and here's the issue. Here's why everybody's just talking about tech and lumping tech together, and it's lazy, and people do it in healthcare too, and it drives me crazy. Tech is so broad. There's big tech, small tech, right? And it's easy to kind of look at XLK and just say tech is lagging, and you'd be right if this was all you looked at. Now, in my notes last week, we looked at small cap tech. We looked at equal weight tech, right? I showed you XITK here today. Tech is fine. The monster names within tech are being squared. Positions are being squared in some of those names. So what you have is XLK chopping sideways to slightly lower. And I say, what's it going to be? Because I think we're at an inflection point where I drew the trend line, but could have easily left it out and used the 50-day, right? So we're kind of at the declining trend line as the 200-day moving average has now had time to catch up. This is of the ratio. Notice RSI though. RSI of this ratio has not been oversold at any point in the past year. Right? So it's hard for me to think that the trend is really turning negative when momentum can't even get going to the downside. And now on an absolute basis, you have to squint, or I should have used a thinner line, but you can see XLK is breaking topside through those September highs. Now, we've talked about that. So tech appears to be getting in gear on an absolute basis. And if it can begin to outperform again, it should probably do so from here. This is the spot. What's it going to be? Are we going to break out through the downtrend line? Or are we going to test the 200-day and play that game? I don't know. Weight of the evidence supports breakout, in my opinion, just given what I'm seeing from the RSI and from momentum. But obviously, I don't know, right? So it's a weight of the evidence approach. We would, if we broke below the 200-day, we'd have to say that that view is wrong and reevaluate the situation. Right now, I think the odds favor topside breakout, but it's going to happen. It has to happen soon if it's going to happen, I think. Otherwise, we're just going to get into kind of a hot mess of a flat 200-day and a lot of choppiness, which is not fun, in which case we just move on. There's other opportunities. There's plenty of areas of the market that are outperforming. A lot of people do the same thing with healthcare. You longtime listeners and watchers of this show or readers of my work know that healthcare is one of those groups where I don't think you can lump it together. You can't just say healthcare is weak, and healthcare is weak, right? Looked at through the lens of XLV. Right, XLV relative to SPY, we're down here at 2-year lows, below a 200-day moving average, and we really haven't made much progress. But healthcare is broad. There's pharma, there's tools, there's services, there's biotech, right? There's med tech. It's a broad group, so you don't want to pigeonhole and say, well, tech is weak, let me avoid it, because you'd be missing something like biotech. Look at XBI relative to SPY. It's on the verge of a breakout on a relative basis above a rising 200-day moving average. So, sometimes some sectors, you just have to do that extra work. You have to bring that extra layer of analysis to the table. Discretionary is the same. Tech, yeah. There's a difference between software, hardware, and services, right? Healthcare, we just touched on it. So I hate to broadly dismiss healthcare when areas like biotech are on the verge of a relative breakout. So let's pay attention there. And then finally, Brazil is a market to watch here. EWZ breaking topside. There's this pattern I like, right, where we've said it in the past. Through the summer highs, and potentially starting to outperform relative to the ACWI. So I think it makes sense to pay attention to Brazil if you're looking outside the US for ideas. That'll wrap us up. JakinAnalytics.com/test drive. See you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.